Hi, welcome again to another edition of Market Analysis for today, July 16th of 2025. I'm Gio Bonacourt, and this is a recording done by Vantage Markets about half an hour prior to the U.S. session open. We saw yesterday how the market obviously had a nice swing higher, make a new all-time high for the Nasdaq, obviously in backfooting of NVIDIA's approval of selling their H20 chips. So things are positive in that end. But after that, CPI came out. It was expected, as expected, 3% month over month. But obviously, there were some inflation signs being found in some goods in there, and then let's say like toys, furniture, and home appliances. So that obviously is going to continue to bring more attention into inflation. The 30-year jumped to 5%. So I believe that pushed that rally, and this could be also seen as profit taken. Looking at the chart on the daily candlestick, we're seeing how the market has really just created is in basically what a 200 and change, 230 point range. Okay, so really that's not much if for a market, but it has continued to make new all-time highs. So from this to the top, really, we jumped to make a new all-time high, we retraced, right? Then we make another all-time high, we retraced, and we made another all-time high. So are we going to retrace again? That could be the scenario. So let's take a look at an hour chart and see where we could probably find some levels or see what the market is actually looking to do. Let's see. So looking at the chart, the first part, looking towards your left, I see this level right here, prior level of support. 1, 2, 3, 4, 5 candles just happened to close and open here, fluctuate higher, fluctuate lower, close, open here, fluctuate higher, close, then open on top, and again just rebounding or just bouncing off this level. So that's an important level of support, of resistance in this case. All right, so that's where we're gonna place our level of resistance, and then our second one will just that range, the top end of that range. Does make sense. See, we don't have to be deciding, oh, it's got to be this, it's got to be that. No, just as long as we have obviously levels that make sense to us, that where markets has bounced off of. Now in this scenario, in this hourly, we have the moving averages intertwining, right? So we see how the 20 has crossed from top on the 50. So that could be like a golden cross scenario, but it's actually 200. But in this case, will we see a continuation to the upside, or are we going to start doing the retracement? This half hour, in this hour, in the next half hour, will the market actually do a retrace, just waiting for the market to open and see? So 20,000 is going to be a level of support for the Nasdaq. Banks are reporting, kicking off the earnings season, but you're gonna be seeing more of a fluctuation on the Dow anyhow. Then we have the S&P. So again, that same level, those same candles is a bit less than the S&P, but in this case, we are already above that. So let's just use the top one, the top level, right? And then our second 6220, as far as support goes, 20-day moving average, the lower Bollinger Band, which coincides with this lower wick here. So let's take a look. The market has fluctuated to the upside initially on this 50-day moving average. Will the market fluctuate towards it and find support there and rebound from here, do a reversal? That could be the case. Then we have the Dow. Okay, so the Dow, just perfect setup of a breakout broke out to the upside, didn't break down. He set up for a breakout, but actually in this case was a breakdown, found support, rebounding. So therefore we are going to use initially obviously the same, that 20-day moving average or the medium of the Bollinger Bands, and then let's just use this area, okay, for support. Resistance, looking back, 44,500 jumps at me, psychological. And then you see this area, so these wicks kind of closing the same place. Then we are pretty high. We are pretty high. So right here, 44,660. Let's see if the market will ride to the upside. All right, so then crude oil. Well, crude oil, hey, crude oil. So after Trump putting 50-day window, we saw that obviously there's a pickup in demand and supply is being obviously the market being flooded. So we saw that pullback on crude oil prices, 67.5. 65 is going to be the target. 65.5, our first level. Now the market seems to be rebounding here. Okay. We could do this. We could do this right here. We could actually come in and use our Fibonacci, and from the high to the low, we could come in and say, let me just put them on the right hand side. We could come and say, all right, so if the market is going to retrace this movement, right, can we come and say that initially, if the market is going to continue its lower trajectory, then the 0.382% will be the first level that the market will come to if that was the case. So for argument's sake, for 66.5, 15, sorry. So let's use that as our first level of resistance. And our second one, well, the golden ratio, everything comes to it. That's why it's used. So let's use that as a possible level of resistance. Then we have our level of support here. So we have the 20 and the 50 moving averages above our levels of resistance. So this could be dynamic if the market continues to move to the upside. But everything looks, now if we do continue to see this move to the downside on crude oil, we'll see a nice spike, a continuation to the upside on the NASDAQ. Nat Gas, all right, so Nat Gas seems to be catching a bid. So trending higher. Let's use levels that will make sense. So in this case, the 20-day moving average, the lower Bollinger Band, and the 50 is outside of the lower Bollinger Band. I mean, the bands has squeezed. So this was a trade setup. When you see that happening, and you have a previous trend going to the upside being the same consolidation, well, the squeeze comes up, and then the move to the upside happens. If we were trending down, right, consolidation, squeeze happens, and then that would be the trajectory of it. But we are on the upside, so let's stay long. Let's look for entries. Gold. So gold is actually, interesting. Let's see if gold will be able to recover today. Initially that one and the lower Bollinger Band. As far as the second level of resistance, I'm gonna use this high, these swing highs here. So let's see, looking to buy. Then we have silver. All right, so silver seems to be recovering this hourly chart. Just the lower Bollinger Band. And then for the second level, okay, that could work. So resistance, I'm actually gonna bring this puppy down to that level right there, trying to touch the wicks, and then 38.20. Let's see if we catch a bid on silver or will consolidate and just stay here sideways trading for a while. Then we have copper. In this hourly chart, copper is just sideways trading. If you look at it, it is condensed. So let's use those extremes highs and extreme lows and this swing low here to find identify levels. Most likely will continue to do so. Now, obviously, copper is going to be sustaining itself north of $5. Obviously, we will need like a breakdown on the dollar index for it to break to the upside, or a spike on the dollar index for it to break down. So Bitcoin in this hourly is just extremes, this level of consolidation here, and then this level of this swing lows here, 20-day moving average, and the lower Bollinger Band for Bitcoin. Now, let's see if it continues to retrace. Will that be strong enough of a retracement for the market to fluctuate towards the 50-day moving average, which acts as a dynamic support? Market comes down towards it, reverses and moves that way, or will it just continue breaking down and then see if it finds support on the 20-day moving average? Then we have the euro. So the euro is just it wasn't able to sustain itself north of 117 or around 117, much less 116. So now 116 seems to be where the market wants to come towards it. Dollar index has recovered. Oh, this is the level of resistance. This one here. I mean, we could do that. 116, 100. It is looking to trend lower. Now, if you were to look at this, it would have looked like a dead cat bounce, but it's just too much of a dead cat bounce. Will be more inclined like this, but it did looks like it. So continuation to the downside is what is expected. Then we have the pound. It's also trending lower. 133, 134 was not able to be sustained. So let's take a look at the upper Bollinger Band and the 50 moving average. Since the 20 is already acting as a dynamic, in this case, dynamic resistance. You see that here. Could this be another scenario where it bounces off, in this case, the lower Bollinger Band? Well, dollar index is jumping. Actually, just use one, like using two for the dollar index. So let's take a look in this hourly chart. 98.5 and the lower Bollinger Band. So he seems to be looking to catch a bid. If he does catches a bid and moves towards the 98.5, we'll see a longer slippage or deeper slippage slide on the currencies and putting pressure on the metals as well. That's it for today. Have a great trading day. I'll see you tomorrow.